Wow, what a weekend. We've just witnessed a geopolitical shockwave, and right now, from Dalal Street all the way to Wall Street, every single investor is holding their breath, waiting for that opening bell on Monday. So, what in the world just happened? And more importantly, what does it mean for your money? Let's get right into it. And this is really the million-dollar question, isn't it? When the market opens, are we looking at a straight-up bloodbath, a sea of red? Or is this the exact kind of chaos that creates a once-in-a-blue-moon buying opportunity? The stakes are sky high, so let's break down exactly what could be coming our way. So what's the trigger for all this anxiety? Well, it all boils down to this one single explosive headline. Coordinated U.S. and Israeli airstrikes in Tehran have resulted in the death of Iran's supreme leader, Ayatollah Khamenei. And this isn't speculation. It's been confirmed by Iranian state media. This is the event that is shaking the very foundations of the global markets. And things escalated fast. I mean, incredibly fast. The strikes started Saturday morning. By that afternoon, the confirmation came through. And before we even got through Sunday, Iran had already hit back, launching missile strikes against both Israeli and U.S. bases in the region. You know, this isn't just a minor incident. We are staring down the barrel of a full-blown crisis. So you might be asking, why is this one event so incredibly destabilizing? Well, it's because the death of a leader who has ruled for more than 3 decades creates what analysts are calling a power vacuum. Think about it. This isn't just a routine change in leadership. It's like pulling the main support beam out from a massive building. The result? Total instability and a very, very real risk that this whole thing could spiral completely out of control. Okay, so let's zoom out a bit and look at the immediate global reaction, because this isn't just a regional problem. Not at all. This is a global economic event, and for a country like India that depends so heavily on imports, the stakes literally could not be higher. And the first, most immediate shockwave is going to hit right where it hurts us the most: crude oil. You know, with tensions at a boiling point, that dreaded number, $100 per barrel, is suddenly very much back on the table. For India, a country that imports over 85% of its oil, well, this is public enemy number one for our economy. And here's why oil is so incredibly vulnerable right now. It all comes down to one tiny, critical choke point on the world map. As expert Sugandha Sachdeva points out, it's all about the Strait of Hormuz. Get this, nearly a fifth of the entire planet's oil supply has to pass through this one narrow channel. Any disruption there, any blockage, and the global energy market could just go into a complete tailspin. So, what happens when fear grips the market? You see this classic reaction: a flight to safety. What does that actually mean? It means investors start dumping what they see as risky. And yeah, that means stocks. And they rush to buy assets that are considered safe havens. We're already seeing it happen. Gold and silver are climbing. The US dollar is getting stronger. This is the financial storm cloud that's gathering right over the stock markets. All right, let's bring it all back home. How is this going to play out on Dalal Street? What can we actually expect when the Nifty and the Sensex open for trading on Monday morning? This is where it gets real. Okay, so analysts are basically gaming out a couple of different paths here. The one with the highest probability is what we're calling the bear case. We're talking a sharp gap down opening, maybe 2 to 3%, driven by foreign investors running for the exits, and of course those fears about inflation because of high oil prices. Now there's another possibility, a base case, which suggests that after that first wave of panic, we might see some brave buyers come in and try to buy the dip. But look, either way, one thing is for sure. The name of the game on Monday is going to be volatility. And hey, if you need any proof that foreign investors were already getting nervous, just look at this number. Before any of this weekend's drama even happened, foreign institutional investors, the FIIs, sold over 7,500 crore rupees worth of Indian stocks on Friday. The risk-off button was already being pushed hard. So what's the big picture for foreign money? Well, as Dr. Vijaya Kumar from Geojit points out, they're not going to be rushing in to buy this dip. Not at all. They're hitting the pause button. You can expect them to sit on the sidelines, to wait and watch how this whole conflict evolves before they even think about putting fresh money into an emerging market like India. Okay, let's get a little more specific. A crisis like this doesn't hit every part of the market in the same way. There are going to be some very clear winners and some very clear losers. Let's dig in. This chart basically gives us a roadmap. It's pretty clear who gets hurt the most. Any sector that's directly tied to crude oil, think about paints, aviation, and the oil marketing companies, they're facing a highly negative impact. No surprise there. Then you have autos and logistics. They're going to suffer from higher fuel costs. On the flip side, investors will probably flock to sectors like IT and pharma, seeing them as defensive safe havens. And, as you'd expect, defense stocks could see a nice little short-term pop because of all the geopolitical tension.
So with all this chaos, all this information, how do you actually trade this market on Monday? Let's talk strategy. Let's talk about the key technical levels that every single trader is going to have their eyes glued to.
Look, the advice from the pros is pretty clear, and it really depends on who you are. So if you're an intraday trader, listen up. Do not try to catch a falling knife. It's a fool's game. Wait for the market to find some kind of stability. For all you swing traders out there, the smartest move is probably just to stay on the sidelines for now. Let the panic die down. And finally, for the long-term investors, the key here is not to panic sell. Historically, moments just like this have created some of the best buying opportunities in solid, high-quality companies. All right, let's talk about the charts. The first, most critical level for the Nifty 50 that everyone is going to be watching is 25,000. This is a huge psychological number and a major technical support area. If the market is going to avoid a much deeper fall, the bulls absolutely must defend this line in the sand. But what happens if 25,000 breaks? Well, the next major support level is 24,500. And pretty much every analyst agrees that if we see a decisive break below this level, it could trigger a whole new wave of panic selling. You can almost think of it as the market's emergency brake.
So what's the bottom line here? What's the main takeaway? It's this. Do not react with blind panic. Yes, the market is going to be volatile. Yes, it's probably going to look a little scary. But you have to remember, volatility is a double-edged sword. And for those who are prepared, for those who have a plan and stay informed, it can also spell massive opportunity.
And now, I want to turn it over to you. After hearing all of this, what's your game plan for Monday? Are you looking at this and thinking it's time to be super cautious? Or are you seeing this as a chance to go shopping for some bargains? Drop a comment below and let me know. For Monday, are you a bull or a bear?